The budget extends business tax breaks and training programs, but international borders to remain shut into next year.
We are looking at labour issues right now, every day.
And cryptocurrency volatility as Tesla backtracks on accepting Bitcoin payments, citing fossil fuel concerns. Also on the program, a women's budget, or was it? Leaders in business and workplace equality give their assessment. But first, farmers have been taking advantage of tax incentives to spend big on equipment. So much so, many yards and showrooms of machinery dealerships have been left bare. But farmers are being warned they could face hefty tax bills in the future, as National Rural reporter Clint Jasper explains.
The money's flowing in regional Australia. Good seasonal conditions and strong commodity prices have sent farmers into a spending frenzy.
So yeah, for sure, make hay while the sun shines. So invest for the long term in these times that have been quite lucrative.
Lamb producer Tim Leeming works through rain, hail or shine. Now he's installed undercover sheds. The purchases were sparked by October's federal budget.
Having those tax incentives enabled us just to accelerate some of the projects that we had in our plans for our farming businesses. And, you know, that stimulated a lot of our local economy.
That's left machinery dealerships like this one almost empty. There's also been disruptions in supply chains in Europe and the United States because of COVID. And the recent blockage of the Suez Canal hasn't helped, but that hasn't stopped orders from farmers.
Farmers generally, they have two lists. They've got a shopping list and a wish list, and because of these government incentives, they've brought their shopping list sales or purchases forward, and they've been able to dig into the wish list.
Lending to finance these purchases has risen sharply. Spending on tractors and irrigation equipment has increased by more than 100 and 200%. In addition to tax sweeteners, historically low interest rates have made financing large purchases more affordable.
There was a lot of excitement and positivity in the beginning, but the excitement has waned a little when some of the unintended tax consequences have become apparent.
Tax expert Tracy Dunn says farmers must get advice from tax advisors before purchasing new assets.
Now, I read tax legislation for fun, and it took me probably 10 hours solid to work through the explanatory memorandums to get an understanding of how these measures actually work.
Tracy Dunn says farmers could face hefty tax bills in the future, and there are specific issues for farms structured as trusts.
In a couple of years' time, when they go to replace the asset, that they have a substantial tax bill that they hadn't planned on. And if they're having a difficult year, that could have an impact on cash flow.
We are building some more extensions with our sheep handling facility in the next 6 months, so that's something to look forward to.
Farmers speeding up plans before the tax breaks disappear.
Tuesday's federal budget extended those tax breaks for businesses in an effort to spur firms to bring their spending forward to help continue the COVID recovery. And for households, the low and middle income tax offset will also be in place for another year. As Stephanie Chalmers reports, businesses are hoping that extra cash in people's wallets will help them as well.
Emergency measures cushioned the COVID blow. The budget aims to continue the bounce back.
While the business is in a relative position of strength now, we are investing.
The first pandemic budget in October made it easier for businesses to write off the cost of investments against their tax bill.
We've taken up some of those opportunities already, invested in machinery that's going to future-proof the organisation for 5 to 10 years.
The budget extends those measures. Businesses can continue to deduct the full cost of eligible assets until mid-2023. Also extended, a measure allowing firms to use losses to offset previously taxed profits. New in this budget, a tax concession for patented medical and biotech innovations, and changes making it easier to depreciate intangible assets, like in-house software systems.
Look, this is a bit of, robbing Peter to pay Paul, of course, because businesses aren't going to buy the same coffee machine twice, so they're bringing it forward. But what we really need to do is to see the economy repair now and then work on the fundamental reforms.
Machinery's one thing, staff to operate it is another.
We are seeing ongoing signs of difficulty for employment. There's certainly skill shortages that are starting to impact us.
The budget extends funding for training and apprenticeships. Businesses are hoping the increased childcare subsidy will also broaden the talent pool.
Older females already have the skill set that don't really need as much training. They're not really readily available because they don't have that flexibility, and I think that this is going to give them that.
The budget also extends tax cuts to households. The low and middle income tax offset is worth up to $1,080 per person. Businesses are hoping that money comes out of wallets and into their tills.
Pandemic support payments gave this pizza shop a boost. They're hoping tax cuts will do the same.
Because people were getting an increase in funds provided from the government, we've seen an increase in sales. So customers that we were usually servicing around a $30 order, they had increased to, $50, $60 orders.
People can't go overseas and spend their money, so they're looking for opportunities here. They're starting to spend more on services as the economy opens up.
The government's spending big while interest rates are at record lows, and hoping companies will do too.
It's always how you use the debt. I like the approach. I think it's setting up a longer-term recovery plan rather than a short-term or a short-cycle outcome.
On the path out of the pandemic downturn.
Treasurer Josh Frydenberg's second pandemic budget also contained billions of dollars to bolster essential services such as aged care and childcare. The budget bottom line is much better than forecast last October. The deficit is expected to be $161 billion this year, all thanks to more Australians in work than ever before, less people on welfare and record iron ore prices, which have delivered a $52 billion windfall to the nation's coffers. The economy is now predicted to grow by 4.25% in the next financial year. Net debt will rise to just under $1 trillion by 2025, and the Treasurer wants to drive unemployment down to its lowest level since before the financial crisis. But Treasury still expects wages growth to be modest at best. This year's budget marks a shift in strategy from the coalition, aiming to lower the jobless rate before committing to budget repair. The Chief Executive of the Grattan Institute, Danielle Wood, and economist Andrew Charlton joined Catherine Robinson on Budget Night.
If anything, I'd say that the forecasts in this budget are a little too reasonable, and the document represents a relatively low level of ambition for Australia's future. Think about the wages assumptions in the budget, which are very low and actually represent real wage drops over the forecast estimates. The growth estimates are lower than the growth estimates produced by the RBA just last week, and there's very little ambition on budget repair. In a 4,000-word speech by the Treasurer, he doesn't mention the word surplus once and has no path back to budget balance. So overall, the document has reasonable forecasts, but actually it represents quite a mediocre picture for the future of Australia.
Is it working to a budget timetable or a long-term prosperity timetable?
Look, when I read it, it's a budget that says under-promise and over-deliver. And there'll be a statement before the next election which shows that actually the situation will improve, and they'll be able to bank that into the forecast in the run-up to an election.
Danielle, we've seen huge spend on social services, particularly when you look at childcare, aged care, mental health, etc. Are some of these spends going to structurally impact these sectors and lead to the outcomes of the vision of this budget?
Look, it certainly is a big spend on social services, and I think that is a pretty fundamental shift from the last budget where the focus was very much on business incentives and infrastructure investment. This time around, I do think it is a story about investing in social services. Big aged care package, $18 billion over 5 years, certainly bigger than some of us are expecting.
Was that enough, though? Just on that, we know what the commissioners were calling for in aged care.
That's right.
Does it satisfy those?
No. So, I mean, if we look at the full suite of Royal Commission recommendations, which is a move to a fully rights-based model, eliminating the home care waiting list, they were talking about $10 billion a year. So it certainly falls short of that total transformative change. but it is a big step, and there are a number of significant measures for aged care there. On childcare, I'd put that in the same category, $1.7 billion over 3 years. It's well targeted, so it's really trying to bring down out-of-pocket costs for those families with 2 or more children in care, where childcare's really expensive. But it's only impacting a quarter of families. It's not actually bringing care costs down across the board. Mental health, welcome $2 billion over 4 years. There are some really significant measures in there around rolling out more headspace, clinics, suicide prevention measures. So I think a lot of people will be really pleased to see that spending.
On the structural side of things, Andrew, I know that you advised Kevin Rudd during the global financial crisis, where money was spent there to stave off a catastrophe, if you like. Is this spend that we're seeing in the right spot?
Well, the government has certainly done the right thing in copying the playbook of the global financial crisis, despite the 10 years of rhetoric about debt and deficit. When push came to shove, Morrison and Frydenberg did the right thing for the economy in putting together such a big package. I think the 2 areas where we could have learnt the lessons of the GFC better were, one, in the structural component of the spending. So this budget bakes in a lot of spending that is not one-off spending, but ongoing spending. Think of lots of those measures, the childcare measures, the tax cut measures, the unemployment benefit measures. All of those are spending measures that will last a long time and make it very difficult to get back into balance. It took 10 years after the global financial crisis for the budget to get even close to balance. This deficit is much higher than the global financial crisis, and so we have a very long way back to surplus for Australia.
Women were labelled a key focus of this year's budget, with targeted packages addressing childcare, superannuation, domestic violence, aged care and housing. Diane Smith-Gander, Chair of CEDA, and former Director of the Workplace Gender Equality Agency, Libby Lyons, joined me in Perth for their assessment.
If we look at the overall budget package, it's $589 billion. Of that, $3.4 billion is going to this women's budget. That is a half of 1% of the whole budget. And half of that $3.4 billion is on the childcare package. So is it going to benefit all women? Certainly not. Will it benefit some? Yes, but certainly not all.
Diane, there was a lot of discussion in the lead up to the release of the budget today about applying a gender lens to the budget. Libby's obviously pointed out some of the numbers. Do you think a gender lens has been applied here?
There's been no gender lens taken to this budget at all. It's certainly going to improve things for some women, but with the economic outlook being a great deal better, I would have hoped, and CEDA would have hoped, that there would have been much more ambition to actually really understand what's going to be needed to strive for the structural changes that will allow women to have equality in their economic participation, and this budget just doesn't go anywhere near far enough towards that goal.
Libby, your experience, of course, as I said, has been about gender equity in the workplace. We heard the Minister Birmingham just a few moments ago say that this is a budget aimed at higher employment outcomes. We saw the government expand the traineeship program and the Treasurer mentioned 5,000 positions for women. Do you think that the opportunities that have been created in this budget are balanced across the genders?
I think it's still very much a budget that looks at hard hats and high vis. And of course, women miss out in that regard because they are very male-dominated industries. I think 5,000 positions for apprenticeships and traineeships for women's great, but it's still a very small percentage of the overall number of apprenticeships and traineeships on offer. We've got to do more, and we can't just keep training women to move into male-dominated industries when they find them extraordinarily hard to work in.
Diane, you're obviously involved at the corporate level with a lot of big companies in Australia. Would you have liked to have seen something in the budget that would encourage businesses to make workplaces more approachable, a more pleasant place to be for women?
Well, I think business is actually doing that, Rachel. There's more work going on in the corporate sector than is going on in this budget. I'm really disappointed that paid parental leave hasn't been addressed. It is the key blocker to keeping women at work. And if we stopped talking about women and started talking to women, so we have a real understanding of what it is they need to be able to stay at work, if we're going to get down to 4% unemployment, we're going to need to have every single one of those 250,000 jobs that the Treasurer is targeting. And we're going to need women and we're going to need working mums to be in those jobs. So putting superannuation on paid parental leave was something that was talked about a lot before this budget, and sadly that seems to have been left right on the cutting room floor.
One area of super, though, that was covered in the budget was the $450 threshold minimum that now doesn't exist. That's obviously good news for some women.
That's fantastic news, very important for anyone in part-time work and anyone in the gig economy. Very good stuff.
But I think too, when we come to paid parental leave, we have to look at paid parental leave for women and men.
Yes.
You know, men are parents too.
Business groups welcomed more than $3 billion to extend training and apprenticeships in the budget, but say it won't be enough to fix Australia's labour shortage. They still want borders to reopen to let migrant workers in. But economists say it's less about skills and more about what companies are willing to pay in wages. Here's Stephanie Chalmers again.
The berries are ready, but the farmers are not.
We are looking at labour issues right now, every day.
Far from having the pick of the crop, Tina McPherson is struggling to find farm workers.
As long as the country stays closed, particularly when they're looking at 2022, we're actually looking at ongoing labour issues for a number of years.
It's just one of the industries trying to fill vacancies, with businesses and lobby groups citing skills shortages. Job ads have surged in hospitality, trades and construction. The budget extended the Job Trainer Fund to offer 163,000 more places and lifted the cap on subsidised apprenticeships, but some say it's not an immediate fix.
The skills stuff is fantastic. It's a huge package. But we are going to have to carefully and gradually get our international border open through starting with international students and then moving to skilled migration.
Economist Alison Pennington thinks it's less about skills and more about wages.
We should always take employer self-reported skills shortages with a degree of caution. There are many employers in low-wage sectors of the economy who have gotten very used to relying on the visa migration system to source their low-paid labour.
For women in particular, higher qualifications don't necessarily mean more money.
Women who are holding those qualifications are concentrated in community and social services and healthcare, think places like disability and aged care.
Aged care was at the centre of the budget, which included more than 33,000 training places for the sector. But aged care providers are still worried about attracting staff to take up those places.
I didn't hear too much in the budget about wages, so I'm curious around, you know, we're getting a lot of money into the sector, but what about the staff? How do we attract and retain staff if we're offering them $22 an hour?
At the other end of the pay scale are high-tech jobs like software engineering. At this startup hub, there are vacancies to be filled. This cybersecurity business has tripled in size in 18 months, but still needs more staff.
We're looking for 2 more engineers and a commercially focused person to help us with some of our expansion efforts. Given the startup ecosystem all over the world, there is a shortage of software engineers and they tend to also get paid a lot better.
Ian Yip says the budget's training packages aren't likely to deliver the skills he needs, but one measure he thinks will help is changes to employee share schemes.
It helps us incentivise and retain talent in situations where we need to give them a package that is competitive, but where the base salary might not be at the rates you would get from a Tier 1 bank, for example.
Trying to score the right talent in a global jobs market.
It doesn't have a big number attached to it, but expect a big impact because the budget includes another review of insolvency laws. The government introduced temporary protections during the pandemic and then sweeping changes that came into effect in January. Small businesses across Australia want legislation that works for them and not just large companies that get attention from journalists, regulators and politicians when they collapse. Daniel Ziffer reports.
7, 8, and 1, da da, ba da da boom.
Paul Malek's life is dance.
And a 1 and 2 and 3 and round and 1, 2, 3, 4 and 5, 6, 7, 8.
I love being in the studio. I love teaching. I love creating. But the business side is very, very, very epically takes much of my time.
With hundreds of students, sometimes fancy footwork is needed to get paid.
People just sometimes fall away, and again, because we're an arts organisation, it's really challenging to talk about money. I would probably give everything away for free. I'm that kind of person. So I get myself in trouble a lot because I'm like, oh yeah, that's fine, that's fine.
Some reforms to insolvency were unveiled in the budget, but they're unlikely to fix problems for many Australian companies like Paul's.
And a breathe and a 2.
A key change brought in just months ago allowed stretched small businesses to trade while they got help from a restructuring advisor. But only 37 firms have taken it up.
The legislation perhaps is not well understood, and it was rushed through with very little consultation.
Also on the table, changes to how trusts are treated. And the Administrative Appeals Tribunal will act as an independent umpire for small business disputes with the Tax Office.
We will take these disputes out of the courts and let small business get on with what they do best.
One of the country's biggest debt collectors says around 80% of businesses will fail.
That doesn't mean they get wound up or the proprietor goes bankrupt, but it means that that business is going to fail. It won't be viable. And this is healthy. People go into business, some fail, some win.
Do you have a reference at all for me?
From its office in Melbourne, Prushka collects money owed to its 50,000 clients.
We understand that things are not great. We may need to send you a statement of financial position depending on what the client would request.
Prushka's staff found their ability to recoup money fell in October, when eligibility for the JobKeeper wage subsidy program was tightened.
People got nervous and started to hang on to money because they were nervous about the future.
The number of insolvencies in Australia fell off a cliff last year, despite the fact there was a massive recession. Protections put in during the global pandemic have now been removed, but even with those safeguards gone, it's a trickle of companies going under, not yet a flood. Almost 1,000 businesses went into administration in the first 3 months of this year. Compare that to 2020, when around 5,000 companies went under. And over 10 years, the average number of firms entering insolvency in a given year is more than 9,300. But industry players are hesitant about big changes, like adopting the more forgiving Chapter 11 style of administration popular in America.
In Australia, you know, we don't want to see companies or directors able to sort of burn everything and then start again the next day. There's a different sort of culture and mentality in Australia compared to the US.
Roger Mendelson doesn't see much happening to help small businesses.
There's a feeling in government that it needs to do things. And sometimes it's healthier not to do things.
It's very much about communication. We don't want to chase people for money, but you know, sometimes you have to.
After a difficult and uncertain year, nobody wants the music to stop.
Casino operator Star Entertainment wants to merge with rival Crown to create a $12 billion gambling giant. The offer from Star values Crown shares above $14, trumping a bid by US firm Blackstone, which was raised last weekend to $12.35 a share. The merger would require approval from the competition regulator. Also this week, both operators agreed to phase out cash from their casinos in a bid to reduce money laundering risks. Hotter than expected US inflation data shocked markets this week, sending Wall Street tumbling and hitting the Australian dollar. US consumer prices rose 0.8% between March and April, triple what the market was expecting. Stripping out volatile food and petrol prices, core inflation had its biggest rise in 40 years. Year on year, inflation came in at 4.2%. Westpac senior currency strategist Sean Callow says the main drivers of inflation appear to be transitory price increases.
Particularly, we had a big jump in used car and truck prices. That was about 10%, and that was certainly a big surprise because it had been very muted before then. We had a big rise in airfares as well, accommodation, car rental. So a lot of this appears to be either due to supply problems, probably the supply chain globally, particularly in the car market that's boosted prices, or the reopening of the US economy. Pretty broad increase, particularly domestic airfares. That's an obvious one that we can link to the reopening, and to that extent not particularly widespread. I think we'd say at this point we had quite muted increases in the prices of, say, medical care and rents and personal care, so enough to be very eye-catching and to have an impact, but not extremely broad.
The local share market was in the red for the week, despite rallying on Friday. The ASX 200 lost 0.9% and the All Ordinaries declined 1.2%. Well, it was a turbulent week for cryptocurrencies, with big moves for Dogecoin and Bitcoin. From being worth almost nothing last year, Dogecoin has surged more than 20,000%, with a lot of Twitter spruiking by Elon Musk. But his appearance on Saturday Night Live last weekend sent the cryptocurrency plunging.
What is it, man?
I keep telling you, it's a cryptocurrency you can trade for conventional money.
Oh, so it's a hustle.
Yeah, it's a hustle.
Why didn't you say that, man? First of all, everybody, it's a hustle.
To the moon!
Later in the week, Mr. Musk tweeted he was working with Dogecoin developers to improve its transaction efficiency, which saw prices recoup some of the post-SNL plunge. Meanwhile, Bitcoin also took a tumble after Tesla announced it would suspend the use of Bitcoin to purchase its vehicles, citing concerns about fossil fuel energy being used to power Bitcoin mining. In a tweet, the Tesla boss said it would not sell its Bitcoin holdings and would use it for transactions as soon as its mining transitioned to more sustainable energy. That drove the price down to its lowest since March, before buyers jumped in to take advantage of the dip. And that's all from Close of Business. For more on those stories, go to our website and catch The Business Monday to Thursday evenings at 8:45 Eastern on the ABC News channel and after the late news on ABC TV. I'm Rachel Papazzoni. Thanks for watching.